Good morning. It's Wednesday, October 11th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after yesterday's choppy session. You have gold up $12 at $18.88, silver up 28 cents at $22.23, copper's unchanged at $3.63, and platinum's down 4 at $8.86. Platinum has really struggled to get above the $900 level, so if you are long that metal, you might want to consider reducing that position between the 890s and the $900 level, and then waiting for a breakthrough through 900 to see if there's any follow-through buying to the upside before reestablishing that position. Now, news overnight, at least 2 anti-tank missiles were fired from Lebanon, mostly Hezbollah, into Israel, which is a new development into this particular conflict here. So the safe haven assets are getting bid. That's why I believe you have gold, silver up, the dollar index slightly weaker. U.S. equities are a bit muted right here. They're sitting at the top end of the range from yesterday. A lot of people were putting on put options in the S&P 500 yesterday. I think that's a really smart move. Whether or not you're bullish or bearish on the market, I think it's a bit of cheap insurance to have out there. They were targeting the DEES 4350 puts. Now, looking at some other news coming out, we do have the Fed minutes at 1 p.m. We also have 3 Fed members speaking later today. There is a bit of inflation data as well at 7:30. So you're going to see it. Let's see if the market responds to any kind of upside inflation surprise, or does, if you don't see any kind of impact, if it comes out slightly hotter and precious metals are able to shrug off any kind of heated up economic data as far as that front, then you know that the safe haven trade is there, and you know that speculators are now flooding into those safe haven assets like gold and silver and getting out of some of the risk assets. So the dynamics of the market might change a bit. If you don't recall, over the last few weeks, we've seen massive ETF outflows out of gold and silver. It was like no one wanted it whatsoever. They were going after treasury yields at that 5% rate and a lot of short-term CDs, 13-month T-bills, things like that. So the current trend, still bearish on gold and silver. 1926.50 is your trend reversal point. We're getting closer, at least in striking distance. The resistance points right now on gold, right here about 1886, then 1896 and 1907. And you go on the support side, it's 1865, 1856, and 1848. So anywhere in those 1850s should be good support. We don't want to see a close below there because chances are there's going to be a washout. So if you need a stop loss position, look into that gap there. If we do close into that gap, you'll most likely want to exit any kind of recent long that you've had. Now on the silver side, real interesting, the support levels are 2233, 2266, and 2299. I haven't seen that one before. The trend reversal point 2345, and then your supports are 2172, 2144, and 2116. So looking at the outside markets, they're mixed right now. You've got crude oil down 30 cents, 85.66. The U.S. equities are a bit firmer. Treasury yields are coming off 4.55, down 9 basis points. That's a pretty big move in the 10-year Treasury. And then finally, you do have the dollar index up about 4, anchored right around 105.60. The trend reversal point, which takes it from bullish to neutral on the dollar, is about 105.25. So it's got a little bit lower to go before it gets to that neutral trend. You got any questions? Give me a call, 312-858-7303. Remember, futures and options trading does involve risk of loss, may not be suitable to all investors. Good luck and good trading.